So what I'm doing here is that I'm sharing my screen instead of sharing the my application. So I hope you can see my screen right now. And what I'm going to do here is that, could you see my screen right now? I flip to my portfolio, current portfolio, long-term portfolio.
Yes,
for the US market,
you can.
Asian. Yeah. Okay. Now, so I'm just going to brief you the current stance. Personally, my view is that US going to hit recession. Later, I'm going to share a few. In fact, if I'm going to use S&P as a benchmark, we already seeing that bear market has arrived. And so what's my long-term portfolio basically is that note for the US market, I'm not exactly interested to buy and hold for long-term. So what I do is that I'm going to trade the US market, and for the Asian market, in fact, I'm accumulating them gradually. Of course, why is it so? Because when the US market moves down, the rest of the world will also suffer as well. But I do believe that earlier, Jun Rong did share for Singapore, and I believe it's not just Singapore, but Asia, you could see that there's a flight to quality, that the hot money is kind of finding this place, Asia, as a place for safe haven, and of course, Singapore here. So in terms of down move, my personal view is that for Asian market, the magnitude of moving south will not be as great as the one perhaps maybe in the US coming forward. And of course, for commodity, my mandate is to buy them. Of course, please don't buy it after the session. Still look for retracement to buy. So that's my strategy. But tonight, just going to discuss very purely on the US market, how to trade them. And this one, you'll be able to apply to your investment. The concept we trade sharing, you can apply for investment, you can apply to your position trading, and you can also apply, and you can try it tonight to apply in your intraday trading if you belongs to the day trader. Now, let me just share with you some exciting things that personally I'm doing. So I say that investing and trading can coexist. So what do I mean by that is this. Now, trading is, to me, is a job. It means that the day you don't trade, there's no income. Yeah, so to me, it's a job. But investment is a business. Why? Because when we invest in good quality stocks, we earn dividends. There's dividends payout on a yearly basis, but there's also a potential capital gain. So this is how I position for the Asian market for my long-term investment portfolio. In the same time, I'm using the trading income from, of course, I look forward to earn the trading income from the US trading. I'll trade in the US market and spend some, keep most of it, and at the right time, I will start to accumulate the Asia stock market. So that's what exactly I'm doing. And now, so the last session that we have, this is the second session, same session that I have opportunity to do a poll. And the poll I have was that I asked the audience that from now to 3 years down the road, what is their view? Are they bearish or are they bullish? So I give them a time frame. And about 60% of them say that they are bullish from now to 3 years down the road. So now let's look at what actually happened to the market here is now why the June, July, the market hit the bottom for US market and start to rebound is because of, if you can see that this is a CPI, Consumer Price Index. Mainly the market watcher used this Consumer Price Index as a inflation indicator. Now, so we ignore the red line because red line, it not include the food and oil. And the oil is the most essential, so it's important. And so let's look at the blue line. Now, what happened to July? Why was there a rebound until somewhere in the 16th of August? That was last Tuesday high. It was because of the CPI. The June numbers was 9.1%, as you can see on the screen. It was the highest. And then we have the July number, it dropped 8.5. And for that, the market welcome. And of course, some say that, oh, inflation is coming down. So, but if you're going to look at this demonstration very dearly, let me just, so what happened here? Okay. Now, if you're going to look at this demonstration here, is that 2.5 over the last 30 years in the 90s and until today. Until 2020, the CPI has been stay about under the average of about 2.5% for the last 30 years. Now, so it's only after the pandemic, the market, the CPI start to move up, the inflation start to pick up to about 5.3. Now, you're going to see that in the technical perspective here, that means over the last 30, and even 40 years, the inflation have kind of kept below about 2.5%, on the top side of the range about 2.5. But 2020 and onwards to 2021 market, the CPI inflation started to surge. Now, moving forward, I just want to share with you how I'm going to track the inflation. If, of course, along the timeline, you hear some economists say that inflation are taming. But how will we know that inflation is taming? Is that I believe that even if 7% the next few months, it is still not good enough, because it kind of the CPI, the inflation number, have broke above this range and is trending up. Now the inflation is trending up. So looking at this chart is that we could see there's a retracement about 5.3%. So if in months to come, the CPI data, if can drop below 5.3, then I would say that technically that the inflation is taming. So I'll be cheering about it. So if not, even if 7%, it is still too high. 7% is the last 40 years CPI is it hit its all-time high, the last 40 years. So this is what we have to take note. And let's move on to the next slide here. Okay, give me a moment. Okay, let me just show. Okay, now, so this is what we could see here is, I hope you're still seeing my PowerPoint slides here. Now, over the last 22 years that we could see, there were only 2 recessions, not including this one, because this recession is not finalized yet. And there's this body called NBER will call for inflation recession. Basically, what they do is that look at the GDP the last 2 quarters. And after that, the last 2 quarters have already settled in June, but they were still going to take a long time to decide whether they're going to call for recession. But I'm going to share with you this little hack, how you're able to see whether the market is going to be bearish. Usually what I've seen here is that the market, the S&P, or you can use any other benchmark where Dow Jones or NASDAQ, for 2 down quarters, it will lead to a bear market. Then after that, the GDP will follow, then they will declare recession. So this little hack that I'm seeing here is that in the last 22 years, there were 2 recessions. Now, remember the recession, they based on GDP. But this little hack that I'm sharing with you here is I based on S&P. Now, over the last 22 years, there were only 2 down quarters, means that each candlestick represents 3 months. 2 down quarters, followed by bear market, and then followed by, of course, along the timeline, they will declare that there's recession. Okay, so you don't have to wait for NBER to declare there's recession or not. So I'm just going to give you some forward view that recession may be around quite near. Why is it so? Because let's look at the more later chart here in August, is that now market is coming down. Now, when is the next quarter ending? The next quarter is going to end in September. Now, can you just bring your attention to subprime crisis? There were 2 down quarters, and then followed by another quarter, which is, I'm not too sure you can see my cursor. So basically, I saw here as a inverted hammer here, where I don't think you can see my cursor, but because I'm doing a share screen, but the 3rd down quarter, you can see an inverted hammer. So September closing, to me, is very important, because when September closed, that will also conclude the 3rd quarter of 2022. So if that close weak, then I think we just have to prepare for the worst, that maybe market is still going to face a lot of headwind. So which is not all bad news, because at least that's why I say that the personally how I position the US market is that I try not to get my long-term position stuck, because having my fund stuck is going to be very painful. So I try to keep my fund really liquid in the US market. I will trade them. So in a short while, I'm going to share with you how I trade the US market, and it is going to be very applicable even for tonight if you want to trade the intraday or position trade the next few days. Okay, so now I'm going to move on to the chart right now. And what I'm showing you is my trading view. And I hope that you can see the trading view chart. If you can see that, Ethan, can you just give me a thumbs up? Say yes, you could see that.
Yes, we can see the trading view.
Yeah, okay.
And see the cursor on as well.
Okay, great. So what I'm going to share with you here is that in December, I believe I have session with IG. If not, then that'll be January. So now I'm going to share with you three parts about the session that we have. We actually, I won't use the word predict because we can't predict the market, but we forecast. Yeah, forecast and prediction are different things. So forecast is that we really use data to make forecast a probability that market is heading down. So we did call for this down move. And somewhere in July, I have another session with TradingView itself. Yeah, so it's the session I partnership with Chicago Mercantile Exchange that we spotted that somewhere in the middle of July, the rebound will come. We're going to share with you how to do that. And then just last week, which is Wednesday, I have a session with IG, the first session that we have, same session that we also realized that there's a potential short. So I'm going to discuss about three parts: the potential down move, this one we have spotted up move, and last Wednesday. So what happened? And now I'm going to move on to the weekly chart first. Now, first of all, how to identify why somewhere in November, December, we realized that this bullish market is getting weaker. Now, let's look at the theory about divergence. Now, divergence is that we could see that each high is a new high. And I'm using MACD just by standard default, what this platform offer, TradingView or IG charting platform, all these are standard default, that we could see that there was a divergence. Now, divergence, it means that the market is not going to come down anytime soon, but it just tells us that the bull market is getting a bit cautious. So at the point in time, we recognized that the bull market was cautious, and that was in November period, as you could see here. Now, then I say that we should look out for triggers. Triggers like what? Then we identified that there was a very nice uptrend line. Okay, I'm going to share with you this, how to plot a uptrend line here is that we try to look for significant trough. Significant trough means you must have a dip and followed by a rebound. So this called a significant trough is that we try to look for how to draw an uptrend line is that there are two rules. The first rule is that we try to find at least 3 significant trough, at least. Then after that, we try to do the best fit. Now, this one, I think it's come really easy because there are how many significant trough? 1, 2, 3, 4, 5, 6. 6 significant trough. I'm just looking for 3. But if you can find the best fit, means that you're going to make adjustment. In this case, I don't have to adjust at all because sometimes it can be at the opening price, sometimes I get a hairline. But this one, I don't have to adjust at all. It represents that this uptrend line is really a good one, a very fundamentally strong uptrend line on NASDAQ. And you can apply this in Dow Jones and S&P, you'll get a similar reading as well. So it means that this 2020 and 2021, this uptrend line was really strong. But what we saw here was earlier this divergence. You still remember how I defined divergence is that this bull is getting a little bit tired. So now this uptrend line will help us to time with a trigger. Now the trigger is this on the 3rd week of 2022. This is the 1st week, 2nd week, and 3rd week. Now 3rd week, it kind of break really convincingly. It means that you have broken this very solid uptrend line of 2020 and 21. You have broke. But before that, the market really tell us that this bull is getting very tired. So on the transition between last year to this year, on the 3rd week of 2022, my mandate for US market is that I think the whole market have transit. And you still remember that in 14 December 2021 is when the first time Jerome Powell, the Federal Chairman, mentioned that the inflation is no longer transitory. Now, all this while, since pandemic started, they have a lockdown, and then they reopen the market, people go to work, shopper go back to shop, and it caused some inflation. And for many months, about 1.5 years, the Federal has been saying that the inflation is caused by this opening up. It's just transitory. Transitory means that it's just short term. But on 14 December 2021, it has changed. He has changed the statement. He has said that inflation is no longer transitory. It kind of really prepped the whole environment that in 2022, inflation is here and we're going to hike interest rate. So which is what it did. Yeah. So what happened here just now, we saw the CPI was that it started to break the range about the upper band about 2.5, and that's where the whole global, we felt that inflation is so real, and every central bank is now hiking the interest rate. Of course, some of us will feel it because we got loan from our house and the fixed rate has been going up, right? So that's exactly what happened here, is that moving forward, and I think the market will continue to stay under pressure. So how I did it for the US market before 2022, the whole time, it was when the market is bull, the strategy is very simple. You just do your best, focus the bound dip. Every time there's some accident, some bad news, the market dip, you try to find a point to get into the market. Now, for 2022, since they have broken this very solid uptrend line with the divergence, now my mandate now is to sell into strength for US market. But that doesn't mean that I do not buy. It's just that when I make a purchase, I try to keep it shorter, just like somewhere in the middle of July, which I'm going to share with you, using the same techniques, how I spot the 18-19 July low and then move up from here, and how we spotted last Wednesday of IG as well, that this little down move has been 2 weeks from now, about 2 weeks. Yeah, last week and this week is 2 weeks. Now I'm going to go back to the daily chart right now, applying the same principle. Okay. Now when the market starts to move down, maybe I should showcase at the beginning of the drop in 2022. Yeah, so that's where the drop began. Now, as the drop begin, I'm always mindful to look out for divergence. Now, on the flip side, divergence in this case in the bear market. So this daily chart is a bear market right now. On the flip side, the divergence is this. When the price, the trough is at lower trough, okay, and if the indicator, that means you also have to use the trough as well, is a higher low. Now this represents that this bear that's divergent, or this downtrend that's divergent. In a downtrend, whenever it's a divergent, it means this. It means that the this bear market, daily bear market, is losing some momentum. It may rebound. Okay. Now, so you have to look at this. So you can use it in minutes chart, in stock market, in commodity market if you want to. And of course, if you look at the weekly chart, then do consider some macro development. But I usually like to use all this chart to give myself the better timing of the age. Then also include the macro development to conclude whether technically I'm seeing, is that right? Just like how I did it in the weekly chart, I'm seeing technically the market is coming down. But so I take note of all this development, what Jerome Powell say, all this number of CPI. So it kind of matches, and you just sell it with confidence at the point in time. Now, so let's look at the daily chart. How did I know that somewhere in the middle of July market will pick up? Technical, okay? Because when the market moves down, it do not keep on moving down. It's jagged, as you can see, right? So I believe that you're jagged, it may continue to travel down. So we're going to study this in a short while. Now let's go back to the daily chart here. That is a lower low, is a higher low. So this represents divergence. Now, so was there a point where we saw that it broke? So now we have to look at the downtrend line. Remember the downtrend line? What are the two rules to draw a downtrend line? Is that first we have to, this is reverse thinking, right? So first we have to look at at least three significant peaks. Then after that, we'll do the best fit. Now I'm going to extend this line a little bit. I'm going to fit in here. Okay, so this is at the opening price. I hope you can see that. Maybe I just expand a little bit. Opening price, and okay, now, so I have one opening, one high, at least three significant peaks. Then we connect them and we try to do the best fit, which I just did, right? Which is not too difficult. Now this is almost perfect, it's perfect in fact. And we have at a high here at the opening price. So that's 1, 2, 3, 4, 4 significant peaks. And that connect a downtrend line. We saw a divergence, and I also saw that it broke above this downtrend line. So it means that this became my biting point or confirmation that the market likely to rebound, because I'm expecting that the market to move down, but along the timeline, it may take some days or some weeks to rebound, and market may be coming down from here. So that's what we're seeing. And now, so what happened to last Wednesday? So I have a session with IG, so last Wednesday. So same thing, because my whole mandate is that I based on this weekly chart that we've developed a bearish view. Now, the last Wednesday we presented here is that we look for a downtrend line. Now, so maybe I just clear this out so we're able to see. Sorry, let me just clear this out. And we're able to see what did we do last Wednesday. Yeah, then we're going to talk about today's market as well. So still the same, how to draw a downtrend line is that we try our best to connect 3 significant peaks. So that's what we did last Wednesday. Yep. Okay. So last Wednesday, it was this bar. Okay, 3 significant peaks, and we try to find the best fit. So there's 1 peak, 2 peak, 3 peak, and 4th peak. That was last Tuesday. So we are quite satisfied with this peak. And so later I'm going to drill down to the hourly chart to share with you why. That was last Wednesday session. It was this. Yeah, if you can see my cursor. Last Wednesday session was this. We have, when my time after Jun Rong is about this time, about 8 p.m. as well. So on Tuesday close, we studied about Tuesday close because last Tuesday have already settled. So we're quite convinced that this downtrend line, it was so good. And then we planned that because at 8, the US market have not opened yet, open at 9:30. So before open, we did call for a sell short with a stop loss above Tuesday high. So we're expecting market to come down. So the market did come down. Now, then we drill down a little bit deeper here was that applying the same principle, what we just shared on divergence, then we look at the, now you notice what I did over the past maybe half an hour is that I applied different time frame. The same principle, but I applied the different time frame. So we're able to see the macro and micro of the market behavior. Now I'm going to go into the 3 hours chart here. So what we did discuss here, why after Tuesday closing on Wednesday before market open, that our call together with the audience was that highly likely market is going to move down. So at any point in time as a trader, you have to make a decision. If you see something, that which way it will go. Well, is it going to move down or is it going to move up? Our view is that it's going to move down. So then if you see something is going to move down, then you have to put a stop at the highest point because we believe that Tuesday high, it should be technically the highest point. So that's about trading. So trading, you have to include stop loss. So it's not a waiting game. Is you get into the market with the best measurement. If it comes to reality, then you manage your profit. If it does not happen, means that we make the wrong judgment. We risk it with a calculated risk. So that's about trading. Now, so on Tuesday, if you notice that earlier we look at the daily chart, now we are looking into the 3 hours chart. Now, so same principle here is that we also saw market moving high. Remember the market on even a 3 hours chart, the market started to pick up somewhere in middle of July, all the way to last Tuesday, that was about 16th of August. Now, we also saw a divergence, if you could see that. That's on 3 hours chart. So at a point in time, we're not exactly sure why, because this guy have not crossed down yet. Yeah, but based on the daily chart, we are a little bit confident that unlikely is going to break the Tuesday high. And my call for the evening is that market is going to move down from here. Okay, so that's what we discussed. And if you're going to ask me about what happened to the market moving forward, okay, so my conclusion is this: continue to track the CPI, because I think this whole season, whether it is in US, in the West, in Europe, in Singapore, in China, I think our whole focus is about US CPI, yeah, inflation. Yeah, because so even it's dropped to 7%, in my opinion, it is not good enough. So when will we know that the inflation is taming off? It is, just now we studied, it must cross below 5%. If it crosses below 5%, there's still a bit room to travel down to put it below about 2 to 2.5. And that's what the market wants. We want it to come to 2%, then the whole trend will still continue, like what we experienced over the last many years. as of now, if you look at from 2.5, the average range top to today, it was much, much higher, and inflation are biting into the consumer in US and all over the world. Then why, you may ask me why all over the world? It's a very simple reason, because US dollars is a reserve currency. So all of us trading partners, business people, we trade in US dollars, and when US dollars inflation hits, all of us will hit as well. Now, so look out for, in the past it was buy on dip, but moving forward, if you can see some development here, that now the market have transit from a higher high, okay, a higher high and a higher low during the bull market. The cross of 2022, something have changed fundamentally on the chart, is that we could see that market start to transit a lower high. And the low is also a lower low. So now, if you ask me to project what's happened to the market, that's what I'm seeing in the months and years ahead. As long as the CPI is not tame, the inflation play a very big part moving forward, okay? And so this is highly likely that's what I'm going to see for the US market. Yeah. So as long as inflation not tame, and this is my projection, my projection for the market is this. So therefore, I think let's go back to my PowerPoint here, where I did prepare all this chart in case the trading view do not work. At least I have all these to stand by. Yeah. So just want to showcase, maybe I start from here. That's 19th of July. And this is what I did, is a collaboration with Chicago Mercantile Exchange. So every week I will post a video. This was on the 19th of July. 19th of July, but the topic is NASDAQ, a leading indicator of Dow Jones, S&P, and Russell. So I explained the same thing about trend line. So if you felt that you're quite fascinated what I shared earlier about how to apply trend line to find breakout, you can go to TradingView, look for my name, Konhao, K-O-N-H-O-W, join together, you can see it. But in any case, after I posted all these tutorial, I will also share on my YouTube channel in 1 or 2 days later. So you can check out my YouTube channel as well. Okay, so that's my YouTube channel called Invest and Trade with Insight. Okay, so now let's go to conclusion, which I mentioned that what we should be looking out for is September closing. Now, I suspect that if September closing, from now until September, we have more than a month to go. So anything can happen. If September month close, it's going to close the third quarter, it's going to close weaker, then that's very similar to the third bar, the third candlestick of the subprime, and that will develop into a bear market continuously. And of course, then I believe that based on my past studies, the stock market will lead the GDP. So then subsequently the NBER will declare that a recession is here. But we don't have to wait for the NBER to declare. So based on what we are studying right now, we could have made quite a good guess. Now, what if we are wrong? If we're wrong, then I'm still very happy. Then this market is still going to continue to move up. But I think the best strategy about investment and trading is always to be prepared for the what we're seeing. So what if we are right, then at least we keep our fund really liquid, and then there's a lot of investment opportunity down the road for the US market and also for the Asian market. Okay, so that's what we share on the weekly chart, and the market subsequently moved up to on 16 August, and that was last Tuesday. Yeah, so last Wednesday we have the other session with IG. And so my mandate for the US market is really at this point in time to trade them. And again, why? Because based on what we studied and based on what I've shared with you, is my personal conviction. I just do not want my cash to get stuck. It is always very painful. So yeah, so I think I've been through that, and but through every crisis, through every learning journey, I think the best part is that we lost some money, but the best thing about it, when we lost money in the past, in my past, is that we just learn to be better. Okay, so that's what I'm doing now. Trading the US market is quite fun. And once you trade, you also have to be very responsible, means that you really have to position yourself as a trader, means that you got to be very structured. get in and know when you're wrong. If you're wrong, just have a calculated risk, get out, and then you expect the best for the market to come down or move up, like something like this. Now, okay, so then we'll move into the Q&A, and maybe the remaining time that we have, I can revisit the trading view again. We can call up 1 or 2 market we can study based on what you have requested, but also based on what we have discussed tonight, the principle, divergence, and trend line, and see whether we can make up something of the market, the current market. So after this session, you can go and visit my Facebook page. My Facebook page, the name is my name, Kon Hao, 2 names joined together. So every day, I will post insights about markets. So every day I spend about 1 to 2 hours read news. Then after that, I will digest them. I will post news. I will post about market mover as well. If I find that there's reversal, potential reversal, I'll post that in as well. So this is what I posted somewhere in 18 December 2021. So basically, throughout Dow Jones, S&P, Russell, and NASDAQ, we could see divergence all over. Okay, so that was last year, right? Then markets start to move down in January, 3rd week of January. And not just the indices, the individual stocks, Apple, Amazon, Google, Tesla. So today they are much lower. Okay, so that's my YouTube channel, is Invest and Trade with Insight. So I think the last 2 sessions I did talk about intraday trading for those that are interested to do intraday trading. 2 weeks ago, I posted on intraday trading using the same principle. So I think that if you are keen to day trade, I hope that will bless you. And lastly, that's my email address. You can, anything that you felt that maybe I did not explain clearly, you need to clarify, just feel free to email me your questions to konhao@wepedia.com. So with that, I think I'll pass the time back to Ethan. Yeah, so I have to also apologize about some technical issue earlier.
No worries,
Ethan.
Connor. Yep, thanks for the wonderful presentation. So I think earlier Jun Rong has also answered some of the questions, and from what I see, we have some questions for we want to tap on your expertise as well. So I think the first one is on, because I think one of your slides you were sharing to accumulate Asia shares. So again, I just wanted to highlight that whatever Kon is sharing is not a trade advice, so you have to do your own due diligence. But a question here that we have is there like a specific country in Asia that you are looking to accumulate shares or to buy into?
Yeah, so on the safer side, I'm definitely interested to invest in the Singapore stocks. I think the reason is, now bear in mind earlier I said it's accumulation. Accumulation means that so sometimes the new stocks maybe not just in Singapore market, it could be in other Asian market, be it China market as well. Especially China market, if it's new to me, I do not really know about the stocks. Of course, before I throw in the first dollar or first 1,000 or first $10,000, I will have know something about the stocks. First, usually what I do is that I will apply technical first. Then if technical speaks to me, because I am a firm believer that when we apply technical studies, we're actually studying into the price behavior of the market. So the market, when the market moves, is actually quite telling that if the market average is low and the confidence players are coming in to accumulate shares, just like, although I do not know them, but I think we may be thinking about the same manner. It's quite value, it's time to accumulate. So when we look at certain price behavior, we can kind of sense to tell that there's some accumulation going on. One of the structure that I just mentioned was divergence. So that's one of it. And so I always get my finger wet first, maybe throw in the first 1,000 or first $10,000. So once you throw in some money, right? Then you'll go and study about the company. You go and get a perspective about company because you already have a stake in it, right? We're not casual about it. So I put in some money first. If it sits well with me, put in some money, then after that, money already in, right? I will continue to check with my brokers. I can check with IG. I'll continue to be in tune with the development of that stocks. Yeah, then along the timeline, if I find that I want to buy another a tranche of that particular stocks, then that's what I mean by accumulation. while the world, maybe US is still moving down, but maybe that particular Singapore stock is kind of stable, then I may want to continue to accumulate that. Earlier I mentioned that Singapore stocks is one of the best paying dividend stocks around, so that's something that I like. Yeah, so if the market may bounce up from here, where I think Singapore stock is quite capable of doing that, then over the longer period, I do not just earn the dividends, but I also expect some capital gain to come. Yeah.
Awesome answer. Thanks for the insights, Konhao. So I think we want to pick your brains on your take on specific commodities as well. In this case, we have a viewer asking on net gas specifically. Do you have any view, be it like fundamental or technical? On
natural gas you're referring to?
Yeah, that's right.
Yeah,
natural
okay,
gas.
let's maybe look at the natural gas and see if we can apply what I shared earlier, right? Yeah, divergence. And if you can see my trading view charts. Yeah. So natural gas. So that's something that I have. Okay. I'm gonna blow this up and gonna clean all these, maybe include one indicator since we study about indicator. So natural gas is something that for commodities, because my conviction is inflation will continue to pick up, yep, for good reason. When inflation is going to continue to pick up, all these consumable commodity prices should continue to move up. Now let's look at the natural gas. Okay. Now for natural gas, if you could see that is really moving from strength to strength. What I mean by moving from strength to strength here is that we could see that the market has been, let me see if I can put some arrow here. Okay, is moving higher. It's growing from strength to strength, a higher high. Okay, so each new high is a higher high. Okay. And do you see any divergence at the moment? The answer is no, you don't see any divergence. So whenever you see that, how to technically and fundamentally, maybe Jun Rong will be definitely able to explain why natural gas is still moving up. Okay, now we could see that the market continue to move in a higher high concept. Okay, at all this point, right? So as it move up, it's still looking very sharp, the V shape. So I think as it move up, you'll create a new high. So each new peak, as you drop down the MACD, the peak itself is a higher high. So whenever the price is high, and the MACD is also a higher high, so technically it represents that the whole price itself for natural gas is still in demand. If you check the volume, I think the volume is also a high demand. And yeah, so I think that natural gas is still going to continue to move up. Let's look at the monthly chart. Yeah, now notice that I play around with different time frame. Now we're going to apply what we've learned earlier to good use, right? So as the market moved down in the past, okay, it's only in the past, right? Yeah, because it already happened. It's a lower low, you can see it. Okay. But we could see that there was a higher low, and therefore natural gas has been on this point a divergence. And of course, if you're going to connect some of the peak, maybe from here to here, yeah. Okay, so these are top, these are false break. These are three significant peaks, and I do the best fit. You just saw how I do that, right? Best fit, and it set there at the opening price. It kind of broke. It broke and it retraced. So in another case study class that I have, during this retracement, so I asked the members to look out for retracement for natural gas. So technically and fundamentally, because fundamentally I believe that the inflation is going to continuously moving up. So natural gas, I think there's still a chance that move up. the best time was here, but along the way, if you're going to bring down to a smaller time frame, you should see some jagged of the market. I will continue to buy on dips for natural gas. So sorry, I took a while because of case study. On this case study, I think I want to spend a little bit more time with you.
No
Okay.
worries. Yep. So Jun Rong, if I can have you to join us for the Q&A as well, I think we can take a few more questions. But maybe Jun Rong, can I just pick your brains and also have your take maybe on some of the fundamental aspects of for nat gas?
Hi. So for natural gas, of course, the overall theme is regarding the supply side of issues, right? I mean, it's always revolving around Russia, around Europe. I mean, we are seeing a strong surge in natural gas because, you know, our Gazprom, you know, previously there was some maintenance work going on for the gas supplies from Russia to Europe. That was put into question. So we see some sort of a recovery in that space, even though it comes with some of a limited supply. Moving forward, we are seeing, you know, another, you can say another excuses of maintenance work going on. So that really strike a lot of uncertainty on, you know, Europe's dependence on Russia for gas supplies. So there has been all these talks going on. As we know, Eurozone is heading into winter. So energy supplies will be a very key issue heading into the rest of the year, especially towards the end of the year. So that is what has really caused a lot of jitters around natural gas prices. So of course, for Kuan Hao, yes, based on that, you know, MACD things could still carry some sort of upside. But if you are more of a near-term trader, you know, I was digesting, you know, what Kuan Hao has been teaching us earlier. But in the near term, on the, you know, 3-hour and 4-hour chart, I think I have been seeing some sort of a bearish divergence. So potentially some retracement in the near term, but, you know, overall the prices could continue to stay elevated towards the rest of the year. Yeah.
Thanks, Jirong. So I think some of the questions also on the indicator that Kuan Hao was teaching. So he's using the MACD indicator without the histogram. So I think there were some questions that were confused whether that's RSI or anything like that. So this indicator is also available on our IG trading platform. Just another question for you, Jun Rong. We have a question from the floor on the third quarter earnings season. Would it be worse off than the second quarter? And you know, hence, will the market be even facing more downside risk in the final quarter or in the time to come?
Yeah, I think the third quarter earnings season, I mean, will definitely be one of the key risk events that we will be watching. But instead of comparing to the previous quarter, I think it largely revolves around market expectations. Why? Because if you look at the second quarter earnings, the one that, you know, had just passed a few months back, 1 or 2 months back, you know, if you remove the energy sector, the S&P 500 earnings actually declined 4% year on year. So just based on that statement, you will guess that, you know, markets will see a downside, right? But markets are actually tapping on that to, if you were to see the overall earnings season, markets are actually tapping on that to see some sort of a recovery. So that kind of detached from the statement because the second quarter earnings expectations from the markets were already pushed very low. So, you know, with that, even though with that decline, with the year-on-year decline, we are seeing still seeing an outperformance compared to market expectations. So I think it's more comparatively to the current market expectations. If we look towards the third quarter, I think some weakness are still being priced, but overall, I would say the earnings expectations are still comparatively high. So that could be a key risk, right? So we have to see somewhat of a market pricing coming down a little bit over the coming months. If not, I would say the watermark is there for markets to really meet their expectations and to outperform. And previously, I also shared on the forward price to earnings valuation. Generally, I see the S&P 500 may struggle a little bit to hold above that 18 times forward price to earnings ratio. So that boils down to, you know, earnings again, because we will have to see a outperformance in the earnings to really justify such valuation moving forward.
All right. So I think maybe we can have one more or two more questions. So I think one of the questions that we have is on the particular stock, or maybe I open it up to maybe a specific sector that you know, you can potentially look into in the bear market. Is there, you know, any specific sector or counters? I'll open this to any of you, Connor or Jun Rong, if you guys want to take the question. any specific sectors or counters that people can look into when it is in a bear market?
I mean, when we are talking about bear market, generally, people tends to shun away from risk, risk assets, right? So even if it can be deemed as more of a defensive sector, such as consumer staples, utilities, there will still be downside. Probably it will be of a lesser scale as compared to more economically sensitive sectors per se. So I would say in this bear market, I mean, if you were really to choose a sector that will be more of a defensive side, I mean consumer staples, utilities, and particularly energy, just because of that overall geopolitical tension going on, the ongoing demand and supply imbalance that is going on. So recently we have really OPEC Plus stepping out to say that they are actually weighing some sort of supply cut in order to keep the oil market intact. So I believe those are sectors that you can potentially look at least over the near term. Yeah.
Okay, Kon, I think you want to share something on NIO?
Oh yes, I think in a bear market, but I think the whole world still move on, right? I think the last physical session that I have with new friends met in a function, we sat down, we talked about cars, and of course, among myself and three new friends, all the three new friends, we talk about when will be our next car, and because now car is so expensive, so we'll wait until our existing one expire and see how's the paper like. And of course, we talk about the next car, all of us are likely going to get, if it's still in a very affordable range, will be EV, right? Yeah, so now for Singapore market itself, for EV market, I think the structure would be ready by 2025, means that every HDB, you will find a charging point. So I think that's what the government want to do by 2025. Infrastructure will be ready. So so I think the hot topic now is the EV, and this is NIO listed in NYSE, so they have a long history over there. The good news is that the EV also listed in Singapore somewhere this year. Yeah, so the pricing method is about the same price. If it's US is trading $18, Singapore is going to trade $18. And of course, the latest note of the market is that Chinese company in US, of course, investor, we are a bit uncertain whether to invest in them. But the good news is that since NIO is in Singapore, then we talk about EV, talk about NIO, the EV sector. Now, so I'm going to apply about, so among the three new friends I met last Wednesday, and so I say that who is going to buy the US EV and who is going to buy the China EV? And myself and another gentleman were going to buy the China EV. We identify as NIO because NIO, the design is very trendy and very nice. So the other two prefer to buy Tesla. So it doesn't matter. It means that there's still a market. Now, for micro analysis, you can check with your broker IG how this works. But let's apply what we have learned tonight, whether does it apply to the NIO market on the daily chart. Okay, so now, so it speaks to me kind of NIO, that it was a lower low, as you could see here. Okay, and we also saw a higher low. Just make sure that it's correct. Yeah. So now this became a divergence. It means that when it's divergence, we have to kind of have this conclusion that maybe this low could be the potential low. I have to mention the word, it could be the potential low. Now, so if I'm going to connect, these are called the secondary downtrend line. Okay. Secondary downtrend line. And do check out my YouTube, because I think maybe tomorrow I post out what's the difference between the secondary downtrend line and the primary downtrend line. Okay, these maybe about here. We could kind of see 1, 2. This one didn't touch. 3. So 3 along the timeline kind of break a bit, but I'm still going to keep track. Hopefully there's more momentum. So technically, I could find there's some support. So that's earlier what I mean by yes, I acknowledge that recession may be quite real in US, and that will affect Singapore market, China market as well. So therefore, along the timeline, I do not mind to look at something like this, select good company, there's potential, and put my first chip down, say at $18.14. So I bought at about $16 at that point in time. Okay, so did I take profit? No, I didn't take profit because my whole idea for the stock market in Asia is to buy, accumulate them. So at this point, I buy. If it move higher along the way, if it retrace, I will buy another one. You know, so something like this. If I'm wrong, it moved down, I will just hold it and find another nice point to get in. That's what I mean by accumulation. So if I'm going to invest $100 in NIO, say for example, maybe now I'm just putting the first $10 down. So along the way, I still have $90 to invest in NIO. So along the way, I'm going to continue to accumulate, say for example, NIO. So I hope that it kind of sums up that what do I mean by accumulation, how to apply the technical to works, and of course, fundamental, you have to also check with a broker. And the best part is that you can do your own work together. Yeah. On yourself, all right. Yes. Yeah.
Thank you. Yeah, so in the essence of time, I think we will just take one last question. So I think Jun Rong, maybe I'll just pose this question to you. So with the port lockdown affecting US cargo, right, I think there's a lot of supply side pressures that is here to stay, especially with the Shanghai factory shutdowns. So do you think this factor is making inflation stick, since demand side easing alone will not be enough to cool inflation entirely?
Okay, yeah. So this is asking about supply side pressure. I mean, with Shanghai factory shutdowns. I think yes, the thesis is valid. But I mean, to really pinpoint really how much of an impact that it really have on the economic conditions. Generally for supply side, you know, that supply side constraint issue. What I'm looking at is in terms of the US manufacturing PMI. So other than that headline figure that we generally see that is splashed over the news, we can actually break it down. They actually have a lot of sub indexes that we can really look to give us a greater clarity on what is happening. So two indicators that I think you may potentially look out for. One will be in terms of the manufacturers orders backlog. The second one will be in terms of the manufacturers, the customers' inventory. So over the past, you know, since COVID, we are seeing a very huge divergence between this order backlog and also customer inventory. So meaning customers' inventory are contracting a lot, and then order backlog are expanding a lot. So this I see as an issue of, you know, supply chain this supply chain constraint worsening. But since roughly around July, roughly May, July 2021, things have peaked. So I'm seeing some sort of a convergence between this, you know, order backlog and also customers' inventory. So somewhat there is some easing in terms of the supply chain issue. So whether to really see how all this could actually play out, I mean, if you're talking about port lockdowns in US cargo, Shanghai factory shutdowns, so I would say that I'll be looking out for whether, you know, things really diverge further to give a better picture of whether this supply chain issue are really eating into the US manufacturers. So that could be one to watch. But as of now, it does seem that the supply chain are still generally easing. So I'm still seeing a convergence between these two sub-indexes. Yeah, so this is just my point of view.
Thank you, Jun Rong. So I think we have come to the end of this session. So the last thing I just wanted to tap on very quickly. So I think one of the question also is on how you can trade these products. So one of the question was how you can buy into commodities. Is it through ETS, futures? So IG has you know, spot market, CFD as well, if you want to trade directly into specific commodities that don't expire. Of course, if you are keen to trade futures, that's fine as well. That's something that we offer in the form of CFD. So if not, then I just wanted to highlight again that, you know, everything shared today is purely for educational purposes. No, don't go on buying new just in the middle of the night later, or even tomorrow, just dive straight into, you know, certain counters that were shared today. Do your own due diligence as well. Just take you know, the views of both presenters with a pinch of salt. Do your own research, have your own conviction, and then, you know, accumulate shares you know, that you are looking at as well. So if not, I just wanted to re-emphasize that the webinar today, we will be uploading it to both the IG Academy and also on our YouTube channel. with that, I'm just going to end off today's session. Thanks again for staying with us all the way, and thanks for joining us. We'll see you in the upcoming sessions. All right. Thanks and good night.